Our next session is really interesting because many of you travel pretty much from all over the world to the Valley, not just to hear best practices and share best practices amongst yourselves, but obviously to hear what some of the prominent thinkers and doers in this Valley do. And this session is going to convene a panel of prominent VCs who are here to discuss and hopefully argue a little bit their perspective on what's fact from fiction and what's around the corner. And I'm actually going to be the moderator for the session, so I'm just going to take the seat. And Max, you're welcome to stand over there when I'm running out of time. And I'd like to invite the panelists, Jay, Rebecca, and Renata. Please join me. Thank you. Hi. Awesome. So we have three of the more successful venture capitalists in the Valley, and I think that it's a rare opportunity for us to have a dialogue about what's next and what you guys are thinking about. And then what we'll do is we'll open up for questions pretty early in the sessions, because I'm sure a bunch of the CIOs who traveled here from pretty much all over the world have a lot to ask and talk to you about. So let's start with a sort of like a high-level question, which is, and feel free to kind of like go in any order. When you think about the next 5 to 10 years in terms of enterprise IT, what do you think is the number one or the couple of technologies that would make a substantial difference from where we are today? And these are obviously technologies that would have a lot of impact in terms of the CIOs and their day-to-day. So maybe Rebecca, starting with you.
So one thing that I'm curious about right now that it's rolling in and sort of in that 5 to 10 year time frame is GDPR. So this whole idea that customers have the right to be forgotten, that's rolling into Europe. And so we've been looking a lot at blockchain and different use cases for blockchain. And I think what's made me kind of step back a little bit is to say, well, how serious is this? And how do you do GDPR and blockchain at the same time? What does that mean? And how serious are U.S. companies really taking this new legislation?
Hi, everyone. I'm Renata. So something that I'm seeing shift in a meaningful way that I think will have meaningful impact in the 5 to 10 years is really the sort of human to machine collaboration and interaction. Because I think a lot of folks talk about Industrial Revolution 4.0 and robots doing things and artificial intelligence, but I've seen a big shift in the ability of machines to actually be useful and sense and percept and actuate things that 2 years ago was not possible, and for these things to start having an actual impact on workflow. So I think the workforce of the future and the way humans and machines interact is going to be very different. The type of data that you extract from your machines at the machine level and what kind of analysis and what kind of communication and that network of machines that are going to monitor each other and are going to communicate with each other and increase efficiency is also going to change. And that's fueled by not only sensors and processing, but advancements in machine learning and reinforcement learning and deep learning. So I actually think that now we're at the cusp of, and I don't think robots are going to overtake humans, but the side-by-side of where sort of creativity, ingenuity, things that are better performed by humans are going to be done that way, and machines are going to do an increasing amount of jobs and work. So I think your workforce 5 years from now is going to be different than what it looks today.
If I could predict the future, I would go like run a hedge fund and short or start a company. Exactly, right? Would make more money that way. No, but I think some of the topics that we are going to talk about and Renata touched upon, like AI, is going to be something that everybody, including CIOs, will have to deal with, and especially how it affects your workforce, right? You have a new generation of workers coming online, the millennials who look at things, who deal with things, who are probably digital, from the get-go. So you have to kind of manage them along with these new technologies, which will be disrupting a lot of the jobs, the traditional way people do their work, and also the traditional jobs that are out there. So I think managing all that is going to be kind of challenging for the next 5 to 10 years.
Well, and just with AI, one of the things we've seen, I'm in a company called Crowdflower, and what they do is they help AI actually work for companies. So some of their biggest companies are like Uber and Airbnb and Apple and Bloomberg. And what they're finding is they're actually going in and helping CIOs figure out how to make their data and their algorithms sort of work for them with AI and machine learning. And so I think that's going to be a big challenge. We've heard a lot about AI and machine learning, but how do you actually really make it work for you? How do you leverage the data you have in a meaningful way? How do you supplement it in the way you need to supplement it? How do you get the human kind of in the loop on those judgment calls where you maybe don't know how to reconcile it? And that's where, at least in Crowdflower, has found a good niche. And I think that's going to be a continuing need in the next 5 to 10 years for big companies.
We had earlier, and I actually want to pause on this because I think it's an important topic. We had a professor from Stanford who came in to talk about autonomous vehicles earlier, which was a super fascinating conversation, as you can imagine. And I believe it was Rolf who asked him a really good question, which is, you're not talking about the truck drivers, right. The couple million truck drivers in the countries who are going to lose their jobs within a decade. And to your point, I mean, yeah, robots are not going to necessarily replace humans in all positions, but if you were to advise someone who's coming into the workforce today, what are the jobs you'd recommend people stay away from?
Yeah, well, first of all, with the truck driver case, I mean, how many planes do you walk onto that have no pilot, right? I mean, that's been around for a really long time.
Right.
And so I think the issue there is that even though AI is coming, the legal framework is not going to be fixed, right? So when you're driving a car, I mean, humans kill millions more people on the road than will AI. What we're going to have a hard time struggling with is what's the error factor we're comfortable with on the machine version, right? And so I think that truck driver is going to be behind that wheel for a very long time because of that issue, because you're judged in a tort case on a reasonable man standard, right? And you're allowed a pretty wide berth of latitude. When you hit common carrier law, you're allowed nothing. And if we get into AI and it's common carrier law, and you're allowed, the margin of error is like 99.999%, that's going to be really tough to hit, right? So I think those truck drivers are going to be there for a while because just our sort of ethical and legal system is going to take a while to figure it out. And I personally don't want some engineer at Tesla deciding which person they take out, right? And so I think that's going to be a challenge. But in terms of the work that this is going to take away, I think it's going to make a lot of work less dangerous for people. I think especially on the factory jobs with the repeat stress syndrome and things like that, we're seeing a lot of robotics innovations on that. And so I think those kinds of things will be made better. I do think some jobs will go away, but I think it's not, in 5 years. I think it's going to the future. And the question for a lot of CIOs in the room is, how do you retrain your workforce? How do you leverage them kind of going into the future to prepare them for that?
Yeah, I think the points are correct. And I think the question why now is a little bit different. And I think is the replacement rate of jobs is lower than it was before, right? And then it's going to add to the next 20, 30, 50 years, what's the next workforce going to do? And it is a big question. I don't have the answer. I don't profess to have the answer. But it makes me happy to see founders of companies that are thinking about that problem, and they're saying, what is a robot assist? What is a collaboration? And what are tasks that are innately human, and what are tasks that no human should do? How do I compensate humans better? How do I train the next workforce to say, okay, now if a robot is doing a function of the job, does the training change and does their capability change? Instead of just saying you man the machine and you go, what else can I teach you to do to interact with these machines that allows you to have different types of jobs, right? This is a big structural change, and it is going to happen, and retraining is an important problem. But I see people kind of also being thoughtful about how do you make the most out of automation without crippling humanity.
Well, and I think we're myopic in this discussion too. I mean, how many of you out there have tried to get work done on your house, or plumbing, electrician, something built like in the last year? Raise your hand. Those people make a ton of money, right? And we're training our kids to go to these four-year colleges with effectively worthless degrees and some liberal arts thing they're never going to get paid for, when my horseshoer is making 250 grand a year, right? And I think part of our issue is, a robot's not going to come shoe my horse. A robot's not going to come fix my toilet when it's clogged. A robot's not going to
Yet.
put the roof on my house. I don't think for a long time. Not yet, but not for a long time, right? And so.
So you recommend your kids to become plumbers?
No, but I think unlike Europe, where they actually have a handle on really job training for people, we don't have that. We think everyone's supposed to be shoved into this four-year college program, and I think that as a whole has to change as we're coming up to speed on what things are going to be replaced. Because quite frankly, a lot of those computer programming jobs are what's going to go by the wayside.
Yep. Jay, you wanted to say something?
No, I was going to say that we are just at the beginning. Like the discussions we are having. If you saw Blade Runner that came out to 2049, there's going to be our kids will probably have
Was
to
that
face.
worth seeing?
About that?
Was it
Well,
good?
no, it's probably not worth seeing because you have to fast forward a lot of stuff. It's too long. But those are the fundamentally where we are with AI is still probably not even in the first inning.
Yeah.
Right? It's just that, what AI will do very well right now is assist people in doing monotonous tasks that they don't want to do and probably give you more leisure time. But there will be a time, maybe in 10, 20 years when you will have more ethical kind of questions about these things, about, what do you do, what happens, whether a robot tries to defend somebody and kill somebody else, things like that, right? So those are questions I think mostly are not going to be answered because the way our legal system works, it kind of becomes a problem for a long time, and then maybe people will try to rectify it. But I don't think there'll be any proactive way of people trying to go in and figure out laws or regulations, or even people who are building these things will be able to kind of think all the consequences of the technology that they're building.
So Jay, I actually want to stay with you and switch topic a little bit. You invested in Alteryx a few years ago, which is obviously analytics big data company, but the topic itself has been around for much longer.
Yeah.
And so it was interesting to go after a company in a pretty well-established, somewhat saturated space. What are the things you're looking for when you think about investing in categories that have been already established or have momentum?
Well, a couple of things. One, not to pander to this audience, but our CIO network was one of the reasons we actually went after Alteryx, because one of the things that they had told us was that, when we use all these Tableau and Click and, Bob J, it really doesn't solve our problem. It solves, my problem of actually showing the data, but then I can't figure out what to do with the data and things like that. And we found Alteryx to be this tool, that was very good at actually sitting underneath those things and integrating and prepping the data, and now over time doing more analysis. But it is, when you look at one of the things is that in especially enterprise software or enterprise technology that we invest in, there is always a shift in the stack every 4 to 5 years. Right? It's like, there was, before you had VMware, there was virtualization. Now, the next thing that people is talking is Docker, right? Containers. There was people build these private clouds. Now there's public cloud, and then it's going to be, another set of kind of hybrid cloud that people are building. So in general, it is actually much easier from the enterprise side to know that, hey, whatever has been successful, like, if Splunk has been successful, very successful, there will be a next generation of a company that does similar stuff on the cloud. So
Sumo Logic, by the way.
Sumo Logic, yeah. So in that way, our job is, at least on the enterprise side, a little bit easier than, say, when people are investing on the consumer side, right? Where basically there, it can be very fickle, because like when Snapchat came up, there were like 4 or 5 different competitors, like Yik Yak and, and what was the Whisper or whatever. Then they all disappeared, and Snap was the successful one. So how do you figure that out? So for us, it's actually a little bit of an easier job.
Yeah.
I don't know what you guys.
Well, I think that also has to do with the fact that Sapphire is a kind of like later stage. And so
Fair enough.
And
then we see the traction,
That's
and
right.
we can talk to the CIOs, and we can talk to our our network and find out if there's something.
so that's definitely an advantage. But what about early stage? Same question.
Yeah, I mean, I grew up at Procter & Gamble. I was a chemie in my old life, and I'm a big believer in fast follower. I'm a huge believer in let somebody else go out, spend a ton of money proving the market's there, and then come up from behind and really with a better product. Lending Club is an example of that, I think, in a big way. I'm in a company right now called Vita Health, which I think is another example of exactly that, where people went out, they proved the market, and then somebody can come in later, really listen to all of you all in the audience, which Vita did, and then come in with a much better platform and product after the need is sort of established. And so I actually don't believe in first mover. I think if we could all really challenge ourselves here in the audience to come up with the really successful companies that are first movers. There are a few out there, and you could name Amazon. It definitely wouldn't be Google or Yahoo or anyone of that sort, right? So I personally am a huge believer in watching the market evolve and then picking the person that gets the product market fit really right.
Yeah, at Lux, we invest in deep science and deep technology, so our paradigm is a little bit different because we're actually going after N of one, maybe 2 or 3 companies in the world that can actually crack the IP. So we live in sort of technical risk for a while. The market's pretty obvious if you get the technological milestones figured out, and our job is more around, is the timing for that solution right? Working on autonomous transportation 10 years ago would have been a bad bet, even if people were already kind of working on parts of it. Some may even claim that autonomous transportation for air right now is too early. So in debate. So for us, it's figuring out, okay, what's the timing, big market timing and technology risk. So that N01, N02 companies.
It's interesting. You've invested in the planet.
That's right.
Talk a little bit about the company and also about space, the final frontier, as far as investments, and where's that going?
Yeah. So Planet is a company that creates microsatellites, and by reducing the cost of creating the satellites, and the company today it sort of represents the same wave that enables a lot of other phenomena to exist in other industries, right? So if you think about miniaturization of processors and cameras and ability to transmit in cloud, that's the form factor or the shifts in technology that enabled Planet, and that exists in so many other industries as well. But because those exist, folks are like, okay, what if we can make a satellite that used to be, many size of this room, costing hundreds of millions of dollars to create and similar amounts to launch? What if we can reduce that footprint, that cost, and have a lot of those? So then if they blow up in the sky, it doesn't really matter. So shelf life of the satellite is not a factor. And we don't actually need to book a whole rocket to take us up. We can actually take hikes in other launchers that are going, so actually our launch cost reduces as well, and then it becomes a volume play of things that go around the Earth, and all of a sudden you start creating new data and you start getting new insights. And the company actually was started more for, okay, the government's starting to spend less, and we worry about deforestation, we worry about all these human issues, so let's see if there's some role there to play, and then they figure out, okay, there's actually a market here for getting all this data in a frequency and in a quality level that is valuable to many industries. So let's say you're an insurance company underwriting roof insurance, right? You don't have that detail of knowing, okay, today you send people that go in and go around the neighborhood, go over and is this shingle, is it not, is it old, is it not, and this is very manual. Would it be great if you had software that just gave you that image, and from Google Maps you can kind of go from your office and you can realize things. So if you trade in weather data, or if you're a commodity insurance hedge fund trader, or if you want to know how many barrels of oil are moving. Oh, this ship wasn't here yesterday, now it is. Oh, this looks like barrels of oil. That's valuable to people. So all this data that wasn't available before, or they were available to people that control that satellite, that opened up a whole new array of business models. So now people are actually playing with different sizes of satellites, different launch vehicles. There are now countries thinking about, how do I actually have my satellite up there? And if I don't have a footprint or a viewpoint, am I missing out on competitive advantage? Different launch cost structures and so on and so forth.
Rebecca, you wanted to add
Yes,
something?
looks like you want to.
No, I think I remember Iridium back in the day, right? But I think it's hard sometimes as investors to kind of shift to why now. So I think that was just such a brilliant investment, actually, because you remember the failures of the past, then you kind of write off whole sectors. And so kudos to you guys in Lux, actually, for making that bet, because it's a really interesting bet. And I was just going to say that those images, so they take the pictures of like the hedge funds will circle how many trucks are in the parking lot. Crowdflower is the one looking at in the background, like labeling them up. So we're more on the lightweight software part of it.
Well, and actually, if you look at, okay, planet, that paradigm, okay, up in the sky, and then you think about the resolution stack, right? And then, okay, I'm really good at capturing data. But a lot of data, what are the insights? So actually there's a company that we backed as well called Orbital Insight that takes data from planet, other geospatial imagery, and also looking at our other radio frequencies, other sources of data that can actually give industries more specific impacts. And the same paradigm, sail drone, doing the same thing but in the ocean.
So actually, I want to build on that. And Jay, I think that topic has been discussed earlier in terms of how much data is now available. And it seems like the old paradigm of let's store it and hope for the best later is not going to work.
No.
What do you think is it sort of like streaming analytics, and where do you think it's going?
Well, I think first of all, right, there's so much capacity now available to kind of actually do something with the data, right? It's a scalable infrastructure that you can buy from Google and from Amazon to do all of that stuff. So that is partly one of the reasons why all of these things are actually also valuable now, right? Because if you set up the satellites up there and it sent you all these images and you couldn't do anything with it because you were constrained on the processing side, you would not be able to do anything. So I think one of the things that the timing is right for a lot of this, not only the satellites being cheap satellites kind of being put up there, but autonomous car all has been kind of driven by the fact that infrastructure and the computing that is available is both scalable and you can pay by the drink and is very cheap. So I think that's what's happening, right? With the data that people are aggregating, there's going to be more and more data, but now people know how to do analysis on that data and get insights, because ultimately that's what people want. You can put up satellites up there, but if you were just watching hedges grow or cars count, you wouldn't really pay for that satellite, right?
Yeah.
So I think use cases and the cloud
Yeah.
has really helped drive this
Yeah.
ability to do all of these things.
I think there are two things on that. One is that, yes, the ability is there, but I do a lot in financial services. So it's great that the images are there, the data is available, but trying to build those into credit and risk models is just a whole nother ballgame, right? Going to an insurance company and saying, look at all this data you have. You could change your credit, you could change your entire underwriting model based upon that, and they just kind of glaze over, right? And so there's part of the engineers gone wild problem that I see here all the time. I'm more of a core kind of business use case person where, yeah, it's all there, but is anyone actually at the business level going to do something to this? And is it going to take 3 years to bake into their scorecard? And how's that going to work out, right? And so that a lot of time is on the pragmatic piece of. That's why a lot of these, like we have new insurance companies. I was in NextCard, which was the first online credit card company way back in the late 90s. It was all because these new companies were able to then spring up because they were taking advantage of new data available in real time and better sources of data. And that's why you see them happen. You always scratch your head and think, God, shouldn't another like a bigger company just do this? And the challenge is really internal business processes, internal risk models not allowing for that to happen.
But
sure.
I do think the incumbents are more open to adopting and at least looking at new technology than it was 10 years ago, because they're just worried that if they don't adopt or do use some of these newer technologies or newer way to create these risk models, somebody will come up out there and try to basically disintermediate them completely, like what people are trying to do in health insurance, So it's kind of interesting. Like I think the technology now, when people get funded nowadays, it's not about just the core technology. People are trying to build these full stack companies, which is taking on these incumbents, and people, the incumbents are actually looking out more than ever, and they all have venture groups now.
That's right. That's right. So I'm just cognizant of time. Real quickly, and then we can open things up for questions. I guess there's a question that obviously we keep asking ourselves, and we never have a good answer until we have a crash, which is, are we in a bubble? And we've been obviously talking about valuations as VCs forever, and they just keep going up. And the question for you is like, is that sustainable?
So I left my crystal ball at home today, so I don't know. I mean, I think I think Silicon Valley is in and of itself a bubble. Like if we don't think we live in a bubble and we've always lived in a bubble, we're kidding ourselves, right? So I don't know. I mean, the crazy thing is more money keeps pouring in until that money has better options. You're going to keep seeing it in venture. And if I could answer that question, I would know when to retire.
So you're saying it's a function of just low interest rates in global economy?
Yeah, it's a global economy. It's low interest rates.
Yeah.
It's, the money has to sort of settle somewhere, and there's a lot of it coming this direction. So as long as that money keeps pouring in, we thought with the hedge funds kind of cooled down, it would be better. Then SoftBank came in and just flipped the table over. And so I don't know when that's going to slow down.
And there's also an interesting phenomenon on the side of China and other sovereign wealth funds that see deep technology as a core future competitive advantage, and they're very aggressively investing in what the future looks like, or wanting their countries to sort of be the beachhead, so with lower regulation, pouring huge amount of money. I mean, China in biotech is outcompeting the U.S. in terms of new discoveries and the pace of new discoveries and patents.
And at the same time, they're buying a ton of real estate here, right? So they're hedging their bets on both sides.
That's a different bubble. Yeah.
That's a total different bubble.
And folks talk about, okay, if China was the manufacturing tiger of the past 30 years, and they are moving up the stack, their country's in line to be the next China in the manufacturing. They're now investing in automation and robotics, right? So you kind of go to the Saudi countries and all that money. So people are looking at what role am I going to play in the world 30 years from now? And a lot of it has to do with science and technology. And still in the U.S., there's a lot of the nascent stuff that is here. So there's another reason for people to put more money here, which adds to the rising tide.
Yeah.
Rising tide.
Jade, what's your take?
No, we are absolutely in a bubble, right? Look at you look at but the funny thing is that the public markets are, although they are gone up tremendously, are still more rational. Like look at where MongoDB priced. Look at where it priced below the last round, right? And maybe it goes up. You looked at Cloudera, right? They priced. So it is. I think some of the investors here kind of are making bets when they're even paying that. They're paying like 5, 6, 7 years ahead of where the company will be and making a bet that way. So they're actually paying in future what the valuation, what you're seeing now, you can say it's not a bubble because these are great companies. And if you say that I'm going to hold it for 5, 6 years, even after IPO, they'll keep on, executing and get to the valuation I paid or, double that. Yeah, that happens, right? But the way, that's not a rational way of how you invest. Yeah.
So it's almost like the inverse of 2000 when the public markets were crazy. Now the private markets are bubbly, but not the public market.
Well, and what I tell my partners is just because somebody's at the high stakes table doesn't mean they know how to play poker, right? And so just because the money's flowing in doesn't mean people actually know what's going on. And so you always have to really check yourself and not look at what other people are doing and sort of stay true to your own sort of sense at the end of the day.
So let's pause here because I'm sure that there's a bunch of questions by the audience. And if you don't mind, just introduce yourself when you ask a question.
Hi, Jason Wolf, SAP. To me, the question is more a supply and demand. Aren't we looking at too many supply of ideas? Lots of great companies, great ideas. But when I look at the CIOs and customers that have problems, the set of problems is much smaller. So the demand side of solutions is much smaller. So it's another way to look at this bubble. I don't know the answer, but the question is not about bubble. It's about how many new ideas. Are you seeing real demand for these startups, or are a lot of these startups conceptually great ideas that in some other world, we saw this with the internet in 2000, in some other future world, they will be needed. The question is, when does that slack catch up?
I mean, I think it's a big way of how we vet companies. We like to talk to all of you and figure out if this is a cool technology or if this is really something that's solving a problem. And I think the most recent space I've really seen this play out in is in construction. There are a ton of these startups trying to help, quote, automate this construction vertical. And the truth is, it's not, some of it's super helpful, but there's so many like small point solutions, and then the companies start adopting them and they find that they're stuck with like strapping together 10 different point solutions and nothing really integrates, and maybe pen and paper and the cell phone was fine, right? And so, for us, that's a big part of our job, is trying to sort out whether this is something that really solves a pain point, or is this just some cool technology that seemed like a good idea, but no one's going to buy? And so you can all help us with that tremendously. And we that's something in our everyday jobs that we really try to sort out well.
Thank you.
No,
And
I think that the issue with the bubble is that there are actually not that many ideas being funded, or, with funded meaning going and raising a lot of money. It's very few. If you look at the statistics, very few companies are raising these mega rounds, and that's why the number of, amount of capital going into venture is growing up, becoming bigger. So what has happened is that people are making a bet saying that, okay, these companies are the ones that are going to be winners, like out of the 20 that started in the same space, and this company, is going to be the winner, and people just put money more and more. And, partly it also enables them not to go public, to be private, like, Uber on the consumer side, is a very good example. But so the bubble is really like, what people are paying for is a few select companies. So it's almost like a have and have not kind of, experience that companies have right now.
that's a good point. We have time for one more quick question, if there's any. Jim.
Jim Wilson from Costa Ventures. I think it's Rebecca. Could you expand a little more on the more interesting applications of blockchain that you're seeing right now?
I honestly am struggling to be. I think title insurance or title like registration and stuff I thought was quite interesting, but it's hard. And we've looked at blockchain a few different times. I think it's one of these things, honestly, that theoretically sound incredibly interesting and compelling, but really when the rubber meets the road, it's hard to define that. And with this new GDPR, right, that's coming through in Europe, if you have a distributed network, how are you going to erase all that data, right? And if you have to control all that. So, we continue to look and be open-minded on blockchain, on ICOs. I've heard a couple of really interesting ICO applications that I think are compelling, especially not on the equity side, but on the debt side, that I think are really fascinating. And we're sort of kicking a few of those around. But, blockchain I struggle with. I'd love for you guys to answer that question, right? Because this is what we hear. We hear from the banks and things that the CIOs are thinking that they would love to sort of build these blockchain applications. And I'm like, okay, you tell me what those are, and I'll go find some more for you, right? But from my side, I think we're struggling a little bit on what that actually might be at the end of the day. That would be something that could be enterprise-wide and scalable and like really applicable to not just to JP Morgan or Goldman, but to everyone, right? So.
Yeah. So with that, Rebecca, Renata, and Jay, thanks so much.
Thank you.